Has the housing crash started? US lost 32,000 jobs in September, says private payroll processor ADP. Negative 32,000 jobs. And I've been saying that in order to have a housing correction, a housing crash, we're going to have to see pain in the economy and unemployment going up. Well, this is definitely a start because less jobs are being created. So if somebody loses their job, gets fired, gets laid off, they're going to have a harder and harder time finding a job. And remember, Jerome Powell stated that if you have a job, everything is great and unemployment is still historically low. However, the jobs being created are extremely low, and if we were to see a rapid uptick in layoffs, the unemployment rate would spike pretty quickly, and that was actually when we were creating positive jobs. Now we're creating negative. And if you take a look at my housing market, so Dinko The Realtor has everyone's back in Utah. You want to make sure wherever you're at, you're finding actually going to give you data, information of what's going on in your housing market so you can take advantage and you can actually make decisions based on numbers. And right here, if you flip over and you take a look, this is the active listings, this blue purple line at the top. You're seeing that active listings in the greater Salt Lake area are much higher than in years past. And we are seeing an inventory increase year over year nationwide. And we are even nationwide starting to push back toward the 2019 levels of amount of homes that are for sale. Now, some markets like in the Northeast, Chicago, those markets are seeing a better seller's market. Now, those markets did not have a good seller's market prior to the pandemic or during the pandemic. And however, things are now have become more affordable comparing to other parts of the country. So again, make sure when you're finding yourself a real estate agent, somebody's not going to just fear monger you, but actually tell you what's going on and let you use information and data to make your decision. So right here, you're seeing that, and you're seeing that this ADP, this is impacting all of America. This is impacting local and so your microeconomics, wherever you're living, and your macroeconomics in America, right? Because let's say everybody else is crashing, well, it's going to trickle down to to almost every location, especially depending how bad the recession is. Now, if the recession is minor, then it won't trickle down everywhere. But remember, 2008, 2009, the Great Recession, that trickled down across the United States. So of course, it's going to start trickling down because why would somebody not move, or why would somebody move to an expensive area if 99% of the rest of the country is having a housing crisis? So this is something to keep an eye out on. Now, right here, U.S. employee health insurance premiums to rise 6% next year. Tariffs are wreaking havoc on the amount of money that it takes for builders. Builders are trying to supposedly hike prices, even though they're giving crazy incentives in a majority of the nation. And car manufacturers have increased their prices, dealerships. Now we're having U.S. employee health insurances rising. And if we take a look over here, we're having premiums on the marketplace increasing, and some are going to potentially double. And the reason is the Inflation Reduction Act is expiring. So this was put in place 2021, and so this might be removed. Now, everybody deserves to have healthcare. Healthcare should definitely be better. And the Obamacare had the right idea, just not the right execution. It hurt the middle class, it helped the lower income families, and it seems that we're always doing something for the very low income and the very high income, the ultra rich. So what happens to everybody in the middle, the 80% that fall not in the low category and not in the rich category? So I hope that we're able to figure something out, because healthcare is something that we need. However, we're seeing that these premiums are increasing in the healthcare industry, and then electricity prices, utility prices are increasing as well, because AI and these data centers, they are requiring so much power. They're going out there and buying this power. Well, how are we supposed to have a soft landing if everything just keeps going up in price and people have already been struggling? The Biden administration lost, well, Kamala lost because the Democrats weren't doing great with the economy. And now we're seeing that the Trump administration isn't doing great either. And the last three data points that were released by the labor statistics were not good. I mean, 29,000 jobs added. And so there's some talks that the shutdown is going on, and the job data that was supposed to be released on Friday wasn't, because the government was shut down. And they're saying that that was going to be really bad. Well, after seeing that the ADP numbers came out negative, the private payrolls, 32,000, I'm going, maybe they did. maybe they're not wanting to show us the Friday labor statistics because they were pretty bad, much worse than what we've seen in the past. And we know that the the job market is deteriorating. And Jerome Powell stated, right? If you have a job, it's great, but if you need one, it's really hard out there. So if we see a spike in layoffs, unemployment is going to spike as well. So this is something that we have to pay attention to. And again, in my housing market, under contracts are starting to decrease. Now, if you take a look at this blue line, and of course, if you go back to 2021, 2022, we're way below that. Nationwide, we're way below that, the amount of homes that are under contract. That's why inventory is going up. And we're now starting to dip below in my greater Salt Lake area year over year. And we're seeing that the number of listings that were entered are higher all year long. And sellers have been pulling their house off the market at record pace for the last decade here. And they're waiting, and a lot of sellers are waiting for next year. Well, are we going to see another dump nationwide in the amount of homes that are going to be hitting the housing market? And does that mean that inventory is going to continue piling up? And maybe all of a sudden we finally do have more inventory than prior to the pandemic, with under contracts decreasing nationwide? So we have to kind of pay attention. And of course, every market is different because there's local economies. Some markets went up a lot, like the greater Salt Lake area during the pandemic. It boomed 72%, which is just wild in a 18-month period. And of course, we're going to have a bigger pullback. Austin, Texas had an even bigger pullback than we did. And in the second half of 2022, it happened nationwide. Recession talks were there. But of course, the government started bailing everybody out, and now we're seeing things deteriorate again. So it's going to have to require some more pain so sellers can actually go, whoa, this is actually real, not a bluff like it was in that second half of 2022. So again, make sure you get yourself a good real estate agent. If you haven't subscribed, you have to hit the like button, hit the subscribe button, because no one's got your back like Dinko the Realtor, providing you local information markets and in the nationwide housing markets. Again, negative 32,000 jobs, healthcare insurance is going up. We're seeing that people are going to have a hard time insuring themselves in the marketplace. That Inflation Reduction Act is potentially going away. There's just a lot. I mean, I don't know how the soft landing happens when cost of everything continues going up. And we're seeing that here. We're seeing inventory. So again, if you haven't, hit the like button, hit the subscribe button, and make sure that you're interviewing an agent that's actually going to give you real market data, real market information, and not just fear monger you.